This afternoon on the Marketplace, Monetary Policy Committee of the Bank of Ghana cuts lending rate to 29%, but warns of persistent challenges.
The committee noted the emerging recovery, but sees the need to maintain a strong policy stance to consolidate the disinflation gains. Under these circumstances, the committee decided to reduce the monetary policy rate by 100 basis points to 29%.
Also in this bulletin, Ghana Revenue Authority chases receiver of defunct banks to pay evaded taxes amounting to some 91 million cedis. Details as the GRA reveals the already struggling produce buying company also owes the authority 203.9 million cedis in 2022. We'll be live in Parliament for the latest from the Public Accounts Committee sitting on that. Also, government records 121.4% oversubscription of T-bills as interest rates fall for the fourth consecutive time this year. We've got details of these and many others coming your way all in a moment. Please stay. Thanks so much for your company. I am Pius Kojo Baka. Straight to our very first story. This afternoon, the Monetary Policy Committee of the Bank of Ghana has cut its key lending rate to commercial banks by 100 basis points. Now, speaking to journalists at a news conference in Accra, Governor Dr. Ernest Addison said despite the cut, there are still concerns about economic recovery, therefore the need to be cautious.
Affairs have increased, providing support for exchange rate stability. Improved forex inflows from the IMF, disbursements, receipt of the cocoa syndicated loan, and expected funding from the World Bank's development policy operations are all expected to help improve foreign exchange inflows. In addition, the Gold for Reserve program of the bank, repatriation of foreign exchange from mining and oil companies, reduction in debt service payments, would further support reserve buildup and improve the external sector outlook. Headline inflation declined sharply by more than 30 percentage points in the course of 2023. Several factors have supported the disinflation process, namely the tight monetary policy stance throughout 2023, favorable international crude oil prices which led to stable export prices and transportation costs, relative stability in the exchange rate. The latest forecast suggests that the disinflation process will continue, and headline inflation is expected to ease to around 13 to 17% by the end of 2024, before gradually trending back to within the medium-term target range of 6 to 10% by 2025. These forecasts notwithstanding, there are upside risks to the inflation outlook, and there is the need for strict implementation of the 2024 budget and a tight monetary policy stance to sustain the disinflation process. The committee noted the emerging recovery, but sees the need to maintain a strong policy stance to consolidate the disinflation gains. Under these circumstances, the committee decided to reduce the monetary policy rate by 100 basis points to 29%. Thank you.
Let's now go live to the Bank of Ghana and engage my colleague George Yafe, who is covering that press conference for us. Thanks so much, George, for joining me on the Marketplace. I'm wondering why the governor is more concerned about the economy in as much as they've cut the policy rate, George.
You're right on the one, and if you heard this comment earlier, he sought to establish or make a point that if you look at the IMF program, we are performing well, we are within target, growth is doing well, but you want to take measures that if there are any threats going forward, you could also come in quickly and react. And that is why you saw the rate going down by 100 basis points to 29%. So he feels that, yes, we are doing well, but there are still some threats to the growth outlook. And that is why you need to be moderate whatever action you take when it comes to the policy rate. That's why we saw that margin of reduction. Some would argue that maybe he could have done more, but it feels that be cautious with your actions so that if there are any unforeseen threats, you could also move in quickly to respond to ensure that things doesn't get out of hand. And that is why we saw that margin of reduction when it comes to the policy rate.
And George, when it comes to inflation, what more is the BOG doing to bring it down?
Well, they think that if you look at the again, they are on track, and therefore maintaining a tight policy stance will be the outlook going forward. I mean, he talked about the fact that if you look at inflation, the range you're looking at between 13 to about 17. Now, why is this very important? Because in the 2024 budget, the finance minister said you're looking at an average of 15%. So if you work with the Bank of Ghana's average rate for this year, they are more optimistic about the outlook for inflation than looking at government numbers. So they are looking at the average maybe about 13 up to 17%. But they believe that they are still going to do what they have to do on the monetary side to ensure that we are on track to achieve that 13 on the average 15% when it comes to inflation rate for this year.
And finally, George, before you take leave of us, when it comes to our international reserves, what more has the governor got to say with that?
And before I even give you more details about the international reserves, I have with me here a banking consultant, an O2A champ, and I just want to get his quick thoughts about the action that the governor of the Bank of Ghana has taken. And there have been arguments even going on here at the meeting about growth, inflation outlook, and all the rest. But the governor insists that, listen, we are within the fund program. What do you make by this 100 basis point cut in the policy rate by the governor of the Bank of Ghana?
Well, I think it's a good move in the sense that the inflation targeting is what is dictating that we should see interest rate and inflation move in tandem. Now, inflation has come down, but just as the way policy rate rose, it didn't come in one big lump. It was gradual. So the same way, his warning is that let's be patient and see a gradual reduction rather than move from 30% to 20%. That doesn't happen in any economy.
Then one quick question has always been the lag time and whether the commercial banks are going to respond. For you, let me get your thoughts on the lag time. When should we see the market respond to this action by the Bank of Ghana?
Well, it's always been historical that the transmission time, when it goes up, is almost instantaneous. When it comes down, it takes a little time because this 30% has been here for a while and therefore it's settled on certain issues. So the transmission will come down, but not instantaneously.
Do I get from you that we shouldn't expect the commercial banks to respond accordingly within the next 1 month or 2 months with respect to their cost of credit?
No, I can't predict how long it will take, but I should think within 2 months it should come down. And at least before the next MPC, which is in 2.5 months' time, we should see a reduction. But on the issue of inflation, as you can testify, the market prices have really come down. If you take staple food like rice, you know, what you used to sell in December now is a fraction down. So things are really showing on the market as we expect it to be. So on the interest rate, I think a little bit of patience will do everybody some good.
So finally, I just want to get your thought also about the impact of this when I am servicing a loan or I'm looking for a loan, as you try and wrap up on this discussion.
Okay. Well, if the inflation projection that the Bank of Ghana has made, which is 15% plus or minus 2%, is to be kept, then if anybody going for a loan should anticipate that interest rates will come down because, as I say, inflation targeting dictates that they move in tandem. Once they rise, then the other should rise. Once one falls, the other should also fall. So if inflation which was 54% in December 2022, is now 20-odd%, and they expect it to be 15 plus or minus 2 by as soon as possible. Then it follows that if you are going to borrow, anticipate that interest rates will come down. But as to when, we can't tell.
So, Payo, that was the thoughts of banking consultant Anotu Champon sharing his thought. And the question that you asked about the reserve, I can quickly wrap up on that. The governor thinks that based on the IMF inflows, you're going to look at more than $6 billion for overall. And also, when you look at the net situation, look at more than $4 billion. From the Bank of Ghana boardroom here at the headquarters of the central bank. This is George Jaffe reporting for Joy Business. Pius.
Grateful, George. And of course, we have to stay a while longer on this developing story, as we've also been joined by finance lecturer at the University of Ghana Business School, Dr. Benjamin Amoah, for some thoughts on that. Thanks so much, sir, for joining me here on the marketplace. Now, policy rate reduced by 100 basis points. I don't know how significant that is really to businesses, but what do you make of that?
Thank you very much. It is modestly a cautious one. And if you look at the 100 basis points, clearly you can see that inflation is what has triggered this reduction by 100 basis points. Now, for borrowers or market watchers who may have interest in how it will affect the rate on the market, 100 basis points in the MPC rate is just a signaling rate. And we should not forget that the Ghana reference rate, which then gives more or less the base rate that the banks will now apply the risk premium of the borrower to, is also influenced by treasury bill rate, cash in vote, and then cash reserve requirement. So, although we have seen a 100 basis point decline in MPC rate, we need to also look at TB rate, cash in vote, and then the cash reserve requirement of the banks. And we'll have a fair idea as to how far low the Ghana reference rate will decline. As we speak now, it's about 32.17%. With the 100 basis point reduction in MPC, we are going to have a marginal decrease in the Ghana reference rate. So what will now bring the difference is more of the borrower's risk premium, which cut across different factors of the borrower who request for a loan from the bank. But at least it's a good sign going forward that should the trend continue, we are going to see some more reductions in the MPC rate. But for now, the 100 basis point, although it's a good sign, will not lead to so much reduction in the rate at which retailers or corporate bodies can borrow from the respective commercial banks.
Then I guess, looking at the rate of reduction we are seeing, businesses shouldn't jubilate yet, because it is really not going to make any impact, really.
Yes, it will not, but to make an impact, because you see, we are talking about how much you are going to borrow. And when it comes to applying rate on loans, how much you are going to borrow, even if there's a 50 basis point reduction, amount to some good money or savings for you or cost, depending on the direction of the rate increase or decreasing. So yes, 100 basis points, if you work it into the Ghana reference rate, we may be looking at maybe something around 31% from the current 32.17%. They will add the risk premium. If you apply that on how much the borrower is seeking for, I think there may be some savings, although not that much. But it is good news because it is signaling that going forward, should the trend continue, we are going to see further reductions in rates.
All right. Thank you very much, Dr. Benjamin Amoah. We are indeed grateful for your time here on the marketplace, speaking to us there. While longer within the banking space, because the Bank of Ghana has approved the recapitalization plans submitted by undercapitalized banks. That's according to the staff report by the International Monetary Fund, dubbed 2023 Article 4 consultations. More in this report.
Undercapitalized banks will at a minimum inject 1/3 of the capital required annually for each of the 3 years ending in 2025 to reach a 13% capital adequacy ratio without regulatory forbearance. The BOG would therefore initiate corrective measures by the end of March 2024 against banks that fail to uphold these recapitalization requirements. In the short term, the Bank of Ghana stands ready to deploy contingency measures if needed to ensure financial sector stability. The IMF said this move will ensure that banks' capital needs have been estimated based on reasonable forward-looking assessments of losses from government debt restructuring and increases in non-performing loans. However, most banks have already submitted their recapitalization plans.
We move on to some other stories touching on revenue though, and the authority says it has exceeded its target set by government for last year. It was able to collect more than 113 billion cedis compared to revised target of 109 billion cedis. Here is more.
Yeah, I think that you all know that the times in which we find ourselves, we need a lot of revenue for a nation, for us as a nation. Number two, even though we are doing well, where we were and where we are trying to get to is still a far cry, or a major task for us. As I've mentioned, we always say that today in the Africa tax outlook established for us at the end of 2021, that the average tax to GDP ratio for Africa was 16.0%. And then we, as of 2021, we are 13.7%. Our aim is to get to at least the average. And we are looking forward to, and that is why, even though we must see an increase, we still think that there's more that we have. Not that we're
doing about 16% now.
No, we are as I said, we are about 13.7.
A while longer with them because they are on the heels of the receiver of the defunct banks for some 91 billion cedis evaded taxes. The central bank in 2017 revoked licenses of more than 300 financial institutions over various financial breaches. Appearing before the Public Accounts Committee this morning, the Ghana Revenue Authority reveals it is unable to collect a total of 91 million cedis taxes owed by the defunct banks. And my colleague James Aveji sat through proceedings and joins me live on phone for more. James, thanks so much for joining me. Some other figures are coming up in relation to taxes owed by defunct banks. Tell us more.
The defunct banks are owing the GRA. Another issue came up about the GRA failing to recover some 120 million cedis tax from some 820 companies. Then the GRA revealed that in fact, all of these were infractions that were pointed out in the Auditor General's report of 2022. The GRA revealed that they were able to retrieve some 63% of that 120 million Ghana cedis, and there was an outstanding of some 37 million Ghana cedis. Then they revealed that the defunct bank again owed some 7 million Ghana cedis out of the 37 million Ghana cedis that were, these companies were supposed to pay as a form of withholding tax on the income of employees, which means that they had deducted this money from the salaries of their employees at the time they were in operation, but they did not submit that to the GRA. Again, they owed another 19 million Ghana cedis. When you put all of these three together at a committee, the GRA reveals that the defunct banks are owing some 117 million Ghana cedis as part of their taxes they are supposed to pay to them. And so the authority says it has already written to the receiver of this defunct bank twice, asking him to pay the money on behalf of the defunct bank.
All right.
So the chairman of the committee at that point in time raises concerns over how he believes that the banking sector cleanup actually has done this country more harm Zangu. But the Deputy Finance Minister, Daryl, disagreed with him, stating the point that we have known over the period that government actually took the step in order to save the deposit of customers of this bank, and that is exactly what they stand by, no matter what it is. I mean, every operation comes with a cost, and so they will count some of these things as the cost, but the major will supersede what we are seeing today. All
right. Thank you very much, James Abeji, for your time here on the Marketplace. He sat through that Public Accounts Committee proceedings. Now, time for the Joy Advisory Series. And this afternoon, on the topic, getting procurement right. Last week, we briefly looked at procurement as the science of acquiring resources for organizations. And we also looked at this from the context of organization strategy and how they set themselves up to deliver performance. Today, we will walk through other critical phases in terms of planning and executing procurements from a practice perspective. Joining us is Dr. Kangsin Pemte, procurement lecturer at GIMPA and procurement specialist at Stanbic Bank Ghana. Thanks so much, sir, for joining me here on the Marketplace, and good to see you. Now, following the above, what should industry players consider critical in planning procurement activities, you would say?
Yeah, thank you for having me once again. Technically, businesses need to, as part of planning for their procurement for the year, need to ensure that they have a strategy in place. Normally, depending upon where one finds himself, some businesses will have their strategy comes by the end of quarter three, and so the various functional units would have picked up teams from those strategy comes to determine how the subsequent year will look like. So in that regard, the various functional units have to decompose the strategy and start doing their planning. So you need to plan, in other words, scoping those key initiatives that are necessary from a procurement point of view, those key initiatives that are necessary to constitute your procurement pipelines. That is both in new projects execution and then for running activities as far as the organization is concerned. So once the strategy is communicated and it is decomposed to the various functional units, scoping of what is needed to execute the strategy from a procurement perspective is done to determine the requirements. By year end, budget is put in place. Once budget is put in place and there is a hearing and budget is approved, we move into the next year. Once the subsequent year comes, we come to the actual execution of the budget in terms of the plan that has been put in place. Now, we need to take note. It is important that once a plan is in place, the scope in terms of the procurement pipelines have been established by the various functional units to achieve the business objective for the year. Having budget in place is one thing, but ensuring that there is cash cover to support the execution of the procurement pipelines is also critical. So we assume that you have all this in place. Once those plans are in place from the strategy that have been constructed, you have the systems in place. The next step is the actual procurement, where you need to execute the procurement. Now, at the execution stage, it is important to have a very critical stakeholder engagement with your business partners, whether you find yourself in the public sector space or in the private sector space. Let the respective functional units or the MMDs that have a procurement activity to be executed to achieving the business objective have a stakeholder engagement with them. Here, you are clarifying and really affirming the scope, the very fine details of what need to be procured in line with the budget that is available. Once the requirements, either from a scope point of view or from a specification point of view, have been agreed, the next step is to actually prep for the tender issuing. So here, tender is actually sometimes confused with what do you call it, a bidding. So in terms of tender here, tender is from the buying organization to the market. So you issue your tender to the market. And then in response, you get proposals or quotes. Now, once the tender is issued in respect of the respective procurement pipelines, you receive proposals or quotations from the market, and then you need to conduct an evaluation In the interest of time, I'm picking up the key headlines. So once the evaluation is conducted, both from a technical and a commercial point of view, you have a fair idea of which of the participating suppliers that have presented proposals
all right.
comes across as having the ability to deliver the service. Just a moment. Then you make a recommendation for the next step, that is to conduct a negotiation. Once the negotiation is conducted and you are settled with which supplier can deliver the particular procurement pipeline, you make a recommendation to the appropriate approving authority. In the private sector, where there is a policy in place, as we looked at last week, or the appropriate governance structure in place, based on the threshold, you need to move that particular recommendation, that approving authority, to look at it and then consider the approval or reject. If they approve, the next step is to award. Putting your contracting in place and commission.
For the sake of time, Mr. Premte, we shall continue this discussion tomorrow, hopefully.
Indeed.
Yeah, to elaborate more on that. Thanks so much for watching The Marketplace. I am Pius Kojubaka. For more stories, feel free to log on to myjoyonline.com. Do have a lovely afternoon. Bye.